All right, Nigel, let's welcome our two experts then and start answering queries sent in by viewers. Mayuresh Joshi of Angel Broking joins in to answer all the queries on the stock end, and we have Firoz Aziz of Anand Rathi Private Wealth Management, who's our personal finance expert. Gentlemen, good afternoon, and let's get started. Chirag Trivedi is our first caller who joins in on the line from Bhavnagar. Hi, Chirag.
Hi, good afternoon, ma'am.
Good afternoon. How can we help you?
I have purchased 500 shares of Tata Motors,
Okay.
and last month on amount of rupees 394.
Okay.
So, what is the future of the Tata Motors, and what is the period to holding that share?
Okay, are you generally a long-term investor? Can you remain
ma'am,
invested if that's the advice given?
I am a short-term investor. I can hold this share for only 6 months. So, what is the process? Since last yesterday, market is down 1,600 points. So, what is the future for that particular share?
Okay, Mayuresh, I know you don't give very short-term advice, but nevertheless, for a 6-month horizon, what's the advice for Chirag? Should he remain invested in the hope that there could be higher levels and so at least his acquisition price?
So, yes, I think he can hold on to the stock, though I think the preferred time horizon would be more than a year. The stock has clearly suffered because of the Chinese volume slowdown that it has witnessed. But clearly, if you look at JLR volumes ex-China, I think they have held up pretty well. Clearly, I think the margins were impacted on the JLR side at 16.4% because of the higher staff costs. But again, I think the management is very, very hopeful, and we are, that the margins would get maintained between that 16 and 17% mark. The modular strategy that JLR is coming with, I think that should hold stead in the quarters to come, along with the new launches that is expected to come through. So I think 40% of its sales comes in from Jaguar XC, the Range Rover Evoque, and clearly Discovery Sport, and how their volumes will pan out. The Chinese JV, the engine sourcing plant in China itself will reduce a lot of their input costs. So clearly I think FY16 in terms of numbers will look a little bit soft, but beyond FY16, I think FY17 the numbers would start reflecting in a much better fashion, assuming demand returns back to China over the next few quarters. And even the standalone business is doing reasonably well. If I leave aside the LCV component, the MHCV segment has done well. The passenger segment with the two new launches has done reasonably well in my opinion, which is reflected on the EBITDA margin. So clearly I think operating leverage benefits along with key sourcing within China should start playing out for Tata Motors. The only caveat being with new launches, depreciation expenses will be a tad bit higher because of costs associated with marketing and new launches as well. And the volume slowdown will be evident for JLR for the coming year. So clearly I think he can hold on to the stock. Valuations are attractive, but it would be a painful period. So I think the advice would be to hold on for probably a year where he should be able to recover his cost price, and if numbers start improving, then will be a re-rating on the stock as far as estimates are concerned from an FY17 perspective. So clearly hold on to Tata Motors.
All right, Mayuresh, so that's a fair advice coming in there. Remember, that stock has corrected a great deal from the high point of the day. But as we slip into a short break, do remember that our closing bell money control question of the day is, do you see the Nifty falling below that 7,500 mark in the current phase of correction? Just log on to moneycontrol.com, post your responses there. We'll read out some of the most interesting responses post 3:30 today.
Firstly, I think we need to distinguish this from previous market panics that we have seen over the last 6-7 years. So if you circle back to say July or August of 2013, there was an India-specific problem that India was dealing with. This time around, I think we are actually sitting on pretty good macro fundamentals. We have brought down our inflation, and I think it's sustainably falling. Real rates are positive thanks to a lot of good work done by the Reserve Bank. Thanks to a lot of good work done by the government, the fiscal deficit is under control, and if anything, it's actually surprising us on the downside. And as a consequence, the current account deficit is in balance or slightly negative. Domestic saving is back in financial assets. So India has more or less rebalanced its economy.
CNBC TV 18, celebrating 15 years of leadership.
Welcome back to your stocks. Just look at this market. It's moving around. We were holding high with a gain of around 70-75 points. We were really rejoicing that. We have given up 50 points in no time. Pull up Bank of Baroda. Just take a look at that stock. It was holding comfortably in the green. Now it's moved into the red. BPCL as well should be up for you on the screen. Now that stock as well was holding with good gains. That as well has fallen off the cliff. But the very fact that we have fallen from the high point of the day, it has to be a big heavyweight. Pull up HDFC. I think that stock could have caused some part of this fall, because the Bank Nifty as well has given up close to around 50 points quickly. So HDFC is down. HDFC Bank as well should come up for you on the screen. That stock as well has seen selling pressure. And Kotak Mahindra Bank, that I think was holding mildly in the green. Currently, that stock in fact is sitting with a cut of around 1.5%. It's moved to the low point of the day. So this market just moving around, far from conviction buying is what we're seeing today. Tata Steel as well should be up for you on the screen. At one point of time, it was high by 4%. That stock as well has given up a goodish bit. And L&T, now that's another heavyweight stock, so that could have swung it around a bit. L&T as well has lost 0.6% just in the last 10 minutes. Take a look at that. That final dip is what we are seeing, and that's why the Nifty has given up close to around 50 points from the top. The Bank Nifty as well, currently it's bounced back, but it was holding high with a gain of close to around 300 points. Now in fact it's higher by close to around 230 points. That's the bit of a dip that we saw. But let's get to our callers. We have Nirav Joshi who calls us from Gujarat. He has a personal finance query. Hi Nirav.
Yes, speaking. Hi.
Hi Nirav, how can we help you?
Yes, I am a 38 years old engineer working in power plant.
Okay.
I have two daughters. Older one is 10 years old and younger one is 5 years old.
All right.
I have made some investment in SIPs. I am paying 30,000 per month in various SIPs.
Okay.
Which is rank 1, 2, 3 by CC in large cap, mid cap, small cap, and some special sectors also. I just want to know that whether this investment is sufficient for education also my daughter, both daughters, and also for their marriage, or should I invest more?
All right, Nirav, good to see you're looking forward to taking care of your little girls as well going ahead. But 30,000 rupees is what you're investing in mutual funds. Could you name those mutual funds out for us? And I believe your time horizon is 15 years. We have with us in the studio our expert Feroz, so he'll help you out with the query. But if you could give us the names of these mutual funds.
Yes, Axis Equity. Hello.
Yes, go ahead.
Sundaram Select Mid-Cap Fund, Axis Equity Fund,
okay.
ICICI Prudential Value Discovery Fund,
okay.
DSP BlackRock, SPI Blue Chip Fund, Kotak 50.
All right.
There are various funds. 15 to 20.
Okay.
There are total around 15 to 20 schemes, and I am paying 1,000 per month in all SIPs. All the SIPs are ranked by CRISIL 1, 2, and 3.
All right. Feroz, over to you.
Yes, Nirav, there are quite a few things which need to be taken care of here. Firstly, I don't think you should have more than 6-7 schemes. 6-7 schemes can actually look at whatever size and actually address the portfolio's need. So consolidate your portfolio. That's very, very important. That's when you will be able to see the power of compounding, and actually fewer schemes are far easier to monitor, and I don't think there's a necessity of any more than 7 schemes. Point number 1. Point number 2, you also mentioned that you have sector-based schemes for your child's education and child's marriage, for example. That's a 10-15 year goal, like you've specified, 15 years. I don't think you should have any thematic funds or sectorial funds, because they take more risk over long periods of time. The return converges to large cap and mid cap funds. So that's point number 2. Point number 3, 30,000 rupees per month. If you have 2 girls, I don't think it will be sufficient for both the more important objectives of education and their marriage. So I think you have to scale it up. The best way to scale it up, which we recommend to retail investors or investors who want to accumulate over monthly installments, is to scale up 10% every year as your disposable incomes go up. So 30,000 will not be sufficient, because inflation on education is over the last 20-25 years has been upwards of 10%. So you would be surprised on the inflation in the next 10-15 years as well. So please keep scaling up your investments at 10%. The schemes seem okay, but consolidating them would be the better idea to my mind. And if you don't have Birla Frontline in your portfolio, add that. And ICICI Prudential Focus Blue Chip is a better blue chip fund than an SBI Blue Chip, which you just mentioned.
All right, up next, Sunil Kumar Rajpal writes to us from Kolkata. He says he wants to invest about 1,000 rupees per month in mutual funds and only for a time horizon of 4 years. So what's intriguing here is that he's just 26 years old, and I wonder why he's chosen this time horizon of just about 4 years, which seems too short for someone his age. But nevertheless, perhaps he has a life goal that's coming up at 30. So if I guess this would mean just one fund, right?
Yes, I think 1,000 rupees if you want to put money in for 4 years. And looking at your age, if you have to bring in some degree of excitement into the portfolio, then you should look at a mid-cap fund. I think after these small corrections which over the last 1 week we've seen, I think from a long-term perspective, at least 3 years plus, mid-cap schemes will actually have a larger propensity to bounce back. So I think look at an ICICI Value Discovery Fund, which is a very good mid-cap scheme, well diversified, good stock pickings. Shankaran Narayan, the CIO, has done a brilliant job in terms of picking up the right stocks. So go for it. And 1,000 rupees should just be one scheme. Don't further split it into 2 schemes is what my recommendation would be.
All right, Feroz, valid advice coming in there, but there's some news flashing here on the screen. In fact, US FDA has issued an import alert for Dabur's Alwar unit, and that stock in fact has taken a bit of a knock. It's down close to around 2%. If you can pull up the intraday chart, you'll see that that stock has taken a bit of a hit on the back of that. But on the flip side, pull up Amaru Raja, Sonia tells us that that stock has moved to the high point of the day, and it's made a fresh lifetime high. So watch out for that stock. And she mentions in this kind of a market, it's making fresh highs. But slip in a short break, come back, answer all your queries. Stay tuned.
CNBC TV 18, celebrating 15 years of leadership.
Welcome back. As we speak, the Nifty in fact has regained all that lost ground, and ICICI Bank, that's a key contributor. The Nifty has moved higher. It's holding with a gain of around 60 points. But take a look at the Bank Nifty. Now that's moved higher. It's holding with a gain of around 300 points approximately. It's all because of ICICI Bank. You pull up a contribution chart as well. You'll see that ICICI Bank would be contributing substantially to today's up move. It's higher by close to around 4.9% approximately. It's moving to the day's high. So maybe there's some short covering as well that's playing out on that stock. And that's why the Nifty has moved higher. GAIL as well has recovered from the low point of the day, but I think pulling up the contribution chart really will give you a good idea of what exactly ICICI Bank has done, both for the Nifty as well as for the Bank Nifty as we speak, holding steady with a gain of close to around points, and single by 20 points. Reliance putting its hand, in fact helping the Nifty to go up by close to around 10 points. But let's get back to answering your queries. We have Tejasvi Patil who calls us from Bangalore. He wants to invest in the stock market. Hi, good afternoon.
Hello.
Hi, Tejasvi, good afternoon. How can we help you?
Sir, actually, I am not a regular trader, but I have invested in few of the stocks.
All right.
Okay, I want to do like monthly, I want to put some amount, like around
Correct.
between 2,000 to 5,000.
2,500. Okay.
Yeah, per month. So, like, I just want to know what the current scenario, which stocks I should invest.
All right. Feroz, he wants to invest around 2 to around 5,000. Do you suggest some sort of plan for him?
Yeah, if you want to actually invest 2 to 5,000 rupees, 2 to 3,000 rupees, I think you should look at mutual funds, since you said that you're not a specific trader. Yeah. So look at mutual funds. In the mutual fund category, take one large cap, one mid cap, and then diversify the portfolio into these two. In the large cap category, look at an ICICI Focus Blue Chip. In the mid cap category, you can look at a Religare mid and small cap scheme. These two schemes, I think, will actually diversify your money in greater than 150 odd stocks, which will bring down the volatility, especially in these times, significantly, and especially when you're doing a systematic investment plan. That's another method of actually easing the volatility. Very contemporary. Go with these two schemes. I think they will help you even out the whole movements in the market.
All right. On that note, Feroz, Mayuresh, thanks very much for joining in and for advising all our viewers. We need to wrap up on your stocks, but do stay tuned. Closing bell is up next.
CNBC TV 18, celebrating 15 years of leadership.